Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the markets are back on track after a rejection from the bottom side of the range. The bulls are holding the steadiness as to look towards that 71 target. The weakness, though, has been very much short-lived after the RBA lifted rates yesterday by 25 basis points to 3.85%. Also overnight, news sources reported that the US shot down an Iranian drone and that armed boats approached a US flagged vessel, which has raised concerns that the efforts to de-escalate the US-Iran tension could be derailed. Furthermore, the US dollar was somewhat mixed after President Trump signed a funding package that ended the brief government shutdown, though the disruptions has already sidelined key US labor data reports that include the JOLTS, jobless claims, and January's non-farm payrolls report. So we won't get those probably till next week. However, eyes will be on the ADP employment and also the ISM services PMI. Also this week, eyes will be on the European Central Bank when it looks to its rate decision, and also we have the Bank of England's rate decision. So turning to the technicals, the top side comes in around 70.45 as minor resistance and could find firmer resistance close to 71 like previously seen. There is, and keep an eye on this, likely to be some bearish divergence, and if so, could see a rejection from the top side and look back towards that key support area where I've outlined here at 69 cents. Moving to the euro, we can see that the support area of 117.7585 was respected, and from there is a little bit of momentum coming through. I would like to see these technicals strengthen up a bit further and also get a break above 118.45 to reignite the move back to 119 and reassess from there in a short-term outlook. Well, once again, dollar yen finding bullishness. After last week's washout, the market is slowly attempting to recover, but still a little bit on the nervous side, just in case there is talks again of intervention risk. Looking at the current technicals though, the MACD hasn't followed suit with the RSI, but the RSI is holding and a little bit of a weak bull trend coming through from the ADX. Let's see if the market can sustain anywhere towards that 156.25 minor and 156.60 above. Support seen around 155.5 to around 155 and reassessing there. Sterling attempting to recover, and I would like to see a little bit more in terms of the technicals to support this rebound. If the market can continue on, then we are looking back towards the region of 137.5 and reassess from there. We do need to clear that level to support a further bullish case. So looking at gold, well, with the risks coming back through again due to the US shooting down Iran drone, the market is once again finding bullishness after last week's washout. As you can see here, we look towards that bottom side of the trend around 4,550. It was stabbed, rejected, and now momentum is coming back very firm here. Keep an eye on the MACD though. I would like to see that marry up with the RSI, but overall, resistance now looks around 5,070 or even on to 5,100 and reassess from there. The broader call still around this year of 6,000 and any weakness should again find support close towards that level of 4,600 if we see another severe drop. But I think with the certain risks and the possibility of raising concerns that the efforts to de-escalate the US-Iran tension could be derailed, the bulls may even come in harder this time. And wrapping up with oil, that also rebounded and posted a bullish or engulfing candle that could even see a further rally. I would like to see confirmation of this candle and a break that is above the level of 64.40 could ignite the move beyond the recent highs and on to $66 a barrel. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the day.